Hello everyone, welcome to the channel. Today we're going to be talking about central bank digital currencies, CBDCs. Still a little bit of an unknown quantity and there's a lot of speculation and nobody really knows exactly what's happening, but there is a lot of information out there about them at the same time. So what I wanted to do tonight is just talk about them for you. So a digital bank currency is a digital form of fiat money issued by a central bank, which is a digital representation of a country's currency. But unlike cryptocurrencies, CBDCs are centralized and are typically backed by the government of the country, meaning they are not subject to the same market fluctuations that a cryptocurrency would. There are several reasons why central banks are actually exploring the idea of issuing CBDCs. Now, increasing digitization with the increasing use of digital payments and those sorts of avenues, banks are looking to keep pace with all the technological advancements. And they want to offer digital forms of their particular country's fiat currency, so that there are options. And financial inclusion, so with CBDCs having the potential to increase financial inclusion, especially for those who do not have access to your traditional banking methods or services. So CBDCs could offer a low-cost option and a secure way to store and transfer money. So it's something the banks are looking at seriously, and even some countries are starting to toy with how that would look. So combating financial crime, which is what offering a digital form of currency can do. Central banks may be able to better track and monitor financial transactions, so reducing the risk of money laundering and other financial crimes, which is a big benefit, because in this day and age, that sort of crime is becoming more prevalent. A lot of casinos are getting into big trouble because a lot of criminals like to go down that avenue to launder. CBDCs could allow central banks to implement monetary policy as well, make it more effective by adjusting interest rates in real time. Everybody likes a lower interest rate, but that might be an option for them to keep them down a bit. So competition with private cryptocurrencies, with the increasing popularity of private cryptocurrencies, such as Bitcoin, the central banks may feel pressure to offer a digital currency of their own, and that's helping to maintain control over the money supply and to compete with those private companies that are decentralized or offering decentralized cryptos. Overall, CBDCs are being proposed as a way to modernize the financial system and also offer a secure, efficient form of digital currency that is backed by the central government or the government of the particular currency that the fiat's held in. However, the potential benefits and drawbacks of CBDCs are still being debated, and their implementation may vary depending on the regulatory environment that they're in and the specific goals of that or of the central bank or the bank, again, of the particular country. So there are some pros, there are some cons of CBDCs, and there's a debate. Some people don't want them, others are welcoming maybe the change. But some of the pros is improved payment efficiency and security. There's increased financial inclusion, especially for those without access to traditional methods or the services from their banks. They may be remote or whatever it might be. The reduction in the use of physical cash, which could reduce criminal activities. such as money laundering and also tax evasion, which is something that might be able to be monitored a lot better. Increased transparency and traceability of transactions. So, if we're using the blockchain, obviously that's going to make things a lot more strict and easy to track. The potential for central banks to implement monetary policies more efficiently and effectively. So there's some of the pros that we find would come along with the CBDC. Some of the drawbacks, some of the cons, the potential for increased government surveillance and a bit of a loss of privacy or invasion. The possible risk of cyber attacks and hacking, which could lead to a loss of funds. The potential for increased financial instability. So if there is a mass adoption of CBDCs and a decline in the use of fiat or your traditional currency and your traditional banks, and the need for significant infrastructure to implement and run the CBDC system. So you need some technological advancements, and there may be some barriers around that. CBDCs are expected to arrive in different forms or in different countries at different times, and that's relevant to the particular country and the zone or the location. With some countries, they're already launching pilot programs, and others are still exploring the idea of getting started or how to go about it. The timeline for rollout of across the world is uncertain and may vary based on the country and its regulatory environment. And as an average citizen, it's probably an important time to really stay informed about what's happening, particularly in your country, but also worldwide. CBDCs and their potential impact on the economy and financial system, may affect you greatly. So you need to sort of be in touch with it. And one way to prepare is to educate yourself on them and their potential benefits and drawbacks. And that's part of the reason why I'm putting this video out. There's probably people out there still that haven't heard of them. They're in the dark, and if they come across this, it might help them out. At least they can start researching. It's also important to ensure that your digital security measures are up to date to protect your funds, your personal information. And, in the event of a cyber attack or a data breach, you want to make sure that you've done everything you can. It is unlikely that CBDCs will completely replace fiat currency or your traditional money in the near future anyway. And, while CBDCs offer several advantages of traditional fiat currency, as such as, the efficiency and the transparency, which we previously discussed, there's still many factors to consider before they can fully replace, physical cash at a bank or deposits at a bank. And that's the speculation about when they might come in, if they do at all. And then one of the main concerns with replacing physical cash and bank deposits with the digital coins is the potential impact on financial stability. So in the event of mass adoption, there may be significant reduction in the use of traditional banks, which, could be a great concern. If the banks aren't making a profit or they're not as busy, it could lead to a decline in the availability of credit, for instance, and other financial services, which, we rely on at the moment. So if they were to disappear, it might make life a little bit hard. Additionally, there may be concerns around privacy and government surveillance with the widespread adoption of them. And that has been something we talked about earlier, and that is a concern. It's important to note that CBDCs are centralised digital currencies, which means that the central bank would be having a greater control over policy and monetary policy, and the ability to monitor financial transactions. That is a concern for some. Overall, though, while CBDCs offer several benefits over your traditional fiat currency, such as that increased efficiency and transparency, it is unlikely that they'll completely replace it, as mentioned. Cash, I guess the old saying, cash is king. There's still people around that sort of live by that. And they may be of a generation that is not, akin to digital currencies, crypto. Some people are still averse to using ATMs and stuff like that. So there are people in the world that would battle a little bit in coming up with this new system. And furthermore, the legal battle that XRP has brought attention to the question of whether certain cryptos or should be classified as securities, and we know that case is still going on, and that could impact how they're regulated in the future. And it's important to note that a CBDC will need to be designed and implemented in a way that ensures compliance. So the outcome of the Ripple case could be extremely important in what happens with CBDCs going forward. Regulatory requirements require, or they do have a lot of challenges, and you have to avoid those, and also the legal side of things. And while the news with XRP may not directly impact the development of CBDCs, it highlights some of the challenges and considerations that these central banks and governments will need to address as we move forward, or they, in each country move forward with their initiatives in the digital space. So what does this mean, for the average person on the street? Well, it's something to really stand up and be aware of, pay attention, do some research, get involved, understand what's happening, and be prepared so that when it does happen, in the event that it does, you know what's happening and you understand. And based on that, it's a perfect time to be looking for residual income, for some additional income, trying to stabilize your wealth or your income and your position in society. And starting an online business is probably a great way to get started, especially with CBDCs being digital and being in that space. It's a good way to get up to speed and au fait with everything that's happening. So I hope that was informative for everyone. Throw your comments down below. Any questions, fire away. And I look forward to speaking to everyone again soon in the next one. Thank you.